Hey Chad.
Hey, Bev.
Hey, thanks for doing this. I've been wanting to talk about your HELOCs for a long time to the people that get my newsletter and to my clients and to my sphere. And I don't know
Yep.
why it took me till the 1st of November to realize we probably should have done it as soon as the government shut down. Um,
Sure.
yeah, but hey, there might be another one and who knows, everybody might need a little HELOC in their arsenal. So if you
Yeah.
wouldn't mind giving everybody an idea, first of all, who you're with, and then tell us about this easy AI generated HELOC.
Yeah. Thanks for having me. So I'm Chad Anderson with Canopy Mortgage. Canopy's a great company. We got a lot of cool things. Everybody says their company's great though. Like, would you really say your company sucks if you work there? So I always love to talk about that. It's all the typical sales stuff. But no, I mean, it's cool. It's fun. We've got really good technology and products programs, but you may not have heard it because we kind of brand ourselves because we run individual franchises, which is super cool, which allows us to, kind of control everything and have more flexibility to help people qualify. So one thing that I have, and we've talked about it kind of offline before, is just the HELOC and how cool it is, how fast it can be. Um, we can get it done literally same day. And you have a right of rescission, which means you get your money 3 or 4 days later, but it can be that fast where you literally have money in your pocket. There's no paperwork. And that's going to blow your mind. It would take me 20 minutes to go into everything, so we're not going to do that. But just understand it's a soft credit check. There's no paperwork. Everything's done just with me and online. And then you have your money in about a week. And that's it. That's literally the gist of it. And as far as helping people, it's been such a big product. I've done more HELOCs in the last 18 months than I've done in my entire career. And a lot of that is just simply because people still have really low interest rates. They've got 2%, 3%. I saw somebody today with a 2.875 on their mortgage statement, which good for them. So I'm not out trying to convince someone, let's refi the whole thing so I get a bigger loan amount. We only want to do what makes sense. So HELOCs are a great way to get yourself out of debt. If you're looking to invest, if you're just looking for a reprieve for 6 months, a year, whatever the case may be, there's infinite scenarios. But the cool thing with a HELOC is it's flexible. You can pay it down, you can draw it back, pay it down, draw it back. So it's kind of there as a giant credit card, but without the 30% interest rates. And so that's kind of the way it works. And we've helped a lot of people. And the biggest one has been, or the two biggest would be consolidate debt. That's number one because credit card debt in this country is out of control, and it's not always somebody's fault. It's just the economy and the way it's been, and trying to survive. And then the other one is renovations, home remodeling. Updating your home, doing something you've always wanted to do, whatever the case may be. But those have been the top two, and it's been really helpful and a tool that a lot of people have taken advantage of.
Okay. So yeah, what's that saying? Aging in place? Is
Hmm.
that the phrase?
Yeah,
Yeah.
yeah,
Yeah. I'm going to be that person. I don't need to downsize, but I'm going to be that person.
there you
So
go.
you just said there's no paperwork. You mean when
Yeah.
the application process is no paperwork?
The whole loan. There's no paperwork. There's literally none. So the way it works is you fill out a short form, and then the HELOC system calculates everything. It runs what's called an AVM, which basically pulls up a value to your home. And then once it does that, it looks at what you owe and it looks at what the value is. And it does a soft credit check, not a hard check. And then it goes off the income you tell it. And then you say, well, I'll just say I make $1 million. Well, there is a back end check to make sure you're not a liar. But what I mean by no documentation is you just connect your bank accounts to the system. And when you do, the algorithm reads your bank accounts and it sees your deposits and it knows what's going in every single month. And it just calculates, hey, can this person repay their bills based on the flow that's coming in every single month and the money that we may give them here in a couple of days? So that's how it works. And again, that means no paperwork for you. The biggest couple of things I've had a lot of success with families on this is self-employed people because we don't use tax returns. So self-employed, you write off a bunch of stuff. We don't have that problem anymore. with this HELOC. So that's one huge advantage. The other is you can do it on second homes and investment properties. So investment HELOCs are a lot of times really hard to find.
Yeah.
But if you've got it out there to where it's like, hey, guess what? We've got a HELOC here, or you've got an investment property. It's got a bunch of equity, but you can't use it because you don't want to sell it
Right.
and you don't want to refinance it. So you're stuck. This one, actually, we have a HELOC for investment properties also. So it's pretty cool.
Okay, that's crazy. That's crazy because I actually had a friend ask me about that, about doing a
There you
HELOC
go.
on investment property. All right,
Yeah.
so I was going to ask you a bunch of questions. I may not need those because it sounds like it's all like I was going to ask you about minimum FICO scores.
600.
Geez, that's crazy.
Yep. 600.
Loan to values.
Primary home, meaning where you live, 85% of the value that the system gives. We don't do appraisals. If it's a second home or an investment property, they cap it at 70%. So they're, obviously a little more strict on
Right.
anything that's not your primary, but the fact that you can still get something on investment is not as common as you might think.
Well, full disclosure, we sat at Panera's and you ran, I mean, I entered name, rank, serial number. Um,
Mhm.
and then you ran, and actually you showed me the value, which I was impressed with, that this
Yep.
system was pulling up. I was happy with that. Of course,
Yep.
it can always be higher, but I wasn't disappointed in the value. And then it
Yeah.
linked to the bank accounts and it blew my mind. It
Yeah.
literally blew my mind.
And
Um,
we did it, what, in about 12 minutes?
I
Something like that.
depends on how much user error issues I had, but
Yeah. Right.
so there's no title search.
They do it online. It's all electronic. It's all being
Okay.
run in the background by the algorithm.
And you don't need to go to a title company to get it signed off on. Uh,
Nope. You can
uh,
either sign electronically over the computer or a mobile notary will come meet
I
you at
was,
your house or a coffee shop.
I was
Yep.
about to ask you about mobile notary. Okay. What kind of rates you've been seeing on these? I'm sure that's risk-based pricing.
Sure. Yeah. I mean, the lowest ones I've seen are, high sevens, low eights. And then the higher end is nine and a half, 10.
Are you
Um, you
kidding?
gotta you gotta
Golly.
remember, HELOC right now the prime rate is 7. So if you take prime, there's always going to be prime plus a half, prime plus one, whatever, and then you're going to have adjustments from there based on your credit score, your loan to value. If you have a 600 credit score and 85% loan to value, honestly, it probably just will say no
Okay.
because you're at the lowest end on credit and the highest end on
Nice.
loan to value.
Okay.
But if you're 780 credit and only trying to borrow up to 70% of your home's value instead of 85, then that's going to get a much better rate. So I just tell people, like, look, HELOCs are great. They're short term, they're an interim fix or some flexibility. No matter what, though, it's better than the Chase Visa, the
Mm-hmm.
Amex,
Mm-hmm.
the City, the Capital One. We all love Jennifer Gardner, but we don't love 27.99%. Okay, just don't. So it's the deal.
They call it Capital One for a reason, or we used
There
to.
you go.
Payment terms.
So you have flexibility there as well. So you can do variable rate or fixed rate. You can do 30-year, 20-year, 15-year, down to 5-year. But what I have seen, Bev, is that the rate doesn't get that much better or worse going up or down in term. So I've just said, hey, instead of tying yourself down to this
Right.
massive payment on a very short term, just pay the extra half a point or
Yeah.
something and quarter point, whatever it is, and just do the 30 and
Okay.
pay extra. And you get, depending on how much you draw and what the exact terms are, there are draw periods anywhere from 3 to 5 years, meaning that for 3 to 5 years, you can draw it down or draw on it, pay it down, draw it back, pay it down, draw it back. And then after that period is over, it converts into a fixed mortgage for the remaining term.
Okay.
So that's how it works. But yeah, I mean, and when that time comes, you just get a new HELOC to pay off
Right.
the
Right.
one you got if you need to draw again. That's all. It's not too difficult.
Is there a minimum loan amount?
Somebody asked me that the other day. I know that it won't accept 8,000 because somebody tried that. I honestly got asked that question and they only wanted eight and it said no, and then neither one of us went and looked. Usually in our world, around 25,000
Okay.
is the minimum. Um, because we're not a bank, like, a traditional credit union or bank. So because of there are people who have to get paid, it begins to violate high cost and things like that when you
Yeah.
are trying to charge fees on such a small loan size. So that's the issue on some of those. But
Okay.
and speaking of which, fees are actually extremely cheap, depending again on the state and the loan situation. It's just a flat one-time fee of either 1.99% of the loan amount or 2.99% of the loan amount. So if it's a $50,000 loan, you're anywhere from 1,000 to 1,500 bucks in closing costs. And that's just taken out of the loan when it funds.
Okay. That's crazy. That's crazy.
Yeah.
Um, how can you close this quickly? I don't understand.
All right, I'm going to use two letters, but I don't want people watching this to freak out, okay? Because it's perfectly safe. We've closed a couple of $1 million of these in the last year. Um, it's all generated by AI. It's all AI. And what's happening is it's going through and it can instantly search based on your property information. And I don't even get your social. I don't. I get your name, your date of birth, your email, your phone number, your address, and you tell me how much money you make and if you're self-employed or employed or retired. And when we do that, the system is so sophisticated and smart that it can pull everything within 60 seconds. So it pulls up your title search liens or your liens on title. It pulls up your soft credit, understands your liabilities, and it pulls up an AVM, so a value. So all those things are already pulled and instantaneous. So that's really all you need for a loan. And the last piece is connecting the bank statements to verify your income. So that part is a little bit later in the process. And when I say later, I mean 30 minutes, not 2 weeks. So it's just
Crazy.
all done through the computer and through AI. And that's why it's so easy and simple. And the letters AI kind of scare some people every now and then. Some people embrace, some people freak out. But I can tell you 90%, I'm not gonna lie and say it's 100. 90% of people, when they're done, are basically like, I can't believe this. I had somebody on Facebook the other day who follows me just randomly hit me up in a chat, said, "Hey, I see you talking about HELOCs all the time. We need about 35,000. What do you need?" I just send a link. All right, I need this form filled out. They did it. That was on a Saturday. They closed on Monday and they had the money by Friday.
It
So
just
it
seems okay. So you're not funding that quickly. You're approving within a day.
well, you can't fund that quickly because you have the right of rescission.
Oh, that's right.
So
That's
that's
right.
why. Yeah. So
Okay.
you close on Monday. If it's your primary home, if it's a second home or investment, you fund same day. But yeah, primary home, you have the right of rescission. So that's the only reason of the delay.
And right of rescission means you have in the HELOC world, because actually Mike and I used to be in the mortgage business back when we were younger. Yeah, you have 3 days to change your mind. 3 days,
Yeah,
right?
basically, you wake up one day and you're like, "Oh my God, what did I do?" Or
Exactly.
you win the lottery,
Right.
whatever, and you're like,
Right.
"All right, I don't need
Yeah.
this anymore." You can
Yeah.
cancel.
Thank God it's not like that with primary mortgages. All right. Where do people find you?
Easiest place is chadwickanderson.com. We also just grabbed a new domain this morning, actually.
Hallelujah.
So
Hallelujah.
yeah,
Oh,
mortgagedadchad.com. So you
oh,
can you can go to either one. You can set up calendar meeting. All my information is there though. Email, phone number, whatever's easiest. I all
mortgage,
that stuff goes straight to me, not to somebody. It goes to me.
mortgagedad.com. Dot com.
Mortgage Dad Chad.
Mortgage Dad chat. Is that on your car?
It is.
Okay, that's what I thought. All right, should we talk about 50-year mortgages?
Why not? Why
Okay.
not?
I don't have an opinion.
You
Well,
know,
I do. I have an
you
opinion. I don't
do.
really care. I don't really care what they do. It's people's choices. But
Well,
I mean, I've seen you post on social media this week about it.
yeah, I think that people need to understand it's an option. Did everybody freak out when interest only became a thing,
Yeah.
or anything, or arms? It's just an option, is all. So nobody's holding a gun to your head saying do a 50-year mortgage. For all those people saying you're never going to get this paid off, of course you're not. You're also never going to have a 30-year mortgage for the whole time.
Right.
I challenge anybody watching to name one person that they know in their entire life who got a 30-year loan and never sold that house before the 30 years was up, or never refinanced that house before the 30-year term was up. You, if you know one, that's probably the max. I know one, and that's it. So, and she's no longer here. So
Yeah, it was
it's
my
just
parents in the 70s. Yeah.
yeah, that's why my
Parents.
great
Yeah.
grandmother, yeah, bought a home in North Huntsville in the
Yeah.
60s and lived
Yeah.
there until 2017 or something. So, but that's it. Like every American statistically refinances or sells every 4 to 6 years. So again, it's not about, oh, I'm going to be here 30 years. Great, you may be, but you're
Right.
going to refinance. It's going to happen. Life is going to happen. So I think, yes, if you look at the interest and the ugly math, the negatives on a 50-year mortgage are it's not going to save people as much as they think, because on a 50-year mortgage, the rate's going to be higher than a 30-year.
Mm.
If you don't believe me, is a rate higher on a 15 or a 30? It's higher on a
30.
30. So a
30.
30 versus a 50, it's going to be
Yeah.
higher on a 50. So your savings are washed away to a certain extent there. The PMI is going to be higher on a 50-year mortgage than it is a 30-year mortgage. PMI is going to last longer on a 50-year mortgage because it's going to take longer
Right.
to get it paid
Get
down to that.
equity.
Yep, to get that 78% loan to value. So yeah, there's the amount of interest you pay over 50 years. Yes, is significantly higher. So yeah, there are plenty of negatives, but if you only look at that and don't understand the statistics and what actually is taking place, and I'm not saying every one, again, it's a stat, it's an average, but when you look at that, the 50-year is an option. So if someone could avoid renting and become a homeowner and have a yard of their own and something they call theirs, where kids can play in the backyard and they can afford it, even if the savings are smaller, if it's the difference maker for somebody, then here's the thing: they now have an asset that is going to appreciate. So they're now building wealth through
Yeah.
appreciation of real estate. And yes, I understand home prices can go up or down, but historically they go up. If you buy real estate, you have a higher chance of being in a wealthier position in life. So it's just an option. If you don't like it, it's fine. Mock it, make fun of it, and stick to the 30. But it's kind of wrong, to criticize somebody else just because it might work for them and it might give them a chance to succeed. But I understand the skepticism, but again, it's just another option, is all it is. Nobody's saying you have to do this.
I sort of like a 3-year car loan or a 7-year car loan.
Right.
It's a
What
matter of
does it
how
matter?
much car you can get. You know,
Right.
you know what I see a niche for this, and some people probably think I'm crazy. Elderly, not elderly, seniors. Like,
Yeah.
let's say a spouse dies and
Yeah.
the income goes away, you refinance for 50 years.
Yeah.
Age discrimination is not a thing.
You can't do it. I actually helped my grandmother 10 years ago, approximately. Um, Her husband passed away, and she was going to be, yeah, a widow living by herself. And she was, I don't know, 78 years old, something like that, at the time, and 30-year mortgage.
Yeah.
I mean,
I mean,
it is what it is. It's a
I
30-year mortgage.
mean that
Odds
difference
are she's not
that
going to be 108,
no,
but
no.
yeah, but she could afford the payment. That was the thing.
And it kept her in a house,
Right. Exactly.
which
No
proved this,
apartments.
right?
Yeah.
No
No
system,
apartments.
right?
No, you know,
Assisted living.
trailer parks, assisted
Trailer
living, none of that.
park.
Yeah.
Well, I'm
I
glad
mean,
they
you
didn't
know,
put grandma in a trailer. I'm glad they
yeah, that's what I mean, though. Yeah, but that is the thing. Sometimes that happens because that's all they could afford.
yeah, yeah. And then yeah, affordability is just better. All
Yeah.
right. Anything else we should talk about today, or is that enough?
I mean, that's a lot. It's all good stuff, though.
It's all
It's two topics, but but you can go deep on both topics. The only other thing I would just really regurgitate to people is if the Feds announce they're going to cut rates over the next year, understand this: the rates get lower leading up to the Fed cut. If you heard anything in this whole video, hear that. The rates get lower leading up to the cut. The actual cut can make rates go higher. And it's done that every single time in the last 15 months. Leading up to the cut, they get lower. When the cut happens, they get higher, and then people are sad, mad, discouraged, they bail. So that's like the biggest last thing I could throw in there is that right there.
they really bail?
Oh yeah.
They
Yeah.
walk away.
Well, not if they're under contract,
Oh,
but
okay.
they're
They're
but
just
they're mad
they're
that
mad.
the rate
Okay.
is now a quarter
Right.
higher. But we also have people who want to refinance who then, oh, we're going to wait.
Okay.
And now the rates jump.
Yeah.
And it's like, now does it make as much sense? It
Yeah.
was already borderline, now it's like, it doesn't make as much sense anymore. So
Yeah.
it's tough.
I have a bank lender here recently told me that yeah, they're playing Russian roulette. When you're waiting for the Fed to talk, yeah, you're playing Russian roulette.
I
So
call it mortgage casino. They,
but I think you've got enough data to show that it doesn't go down when the Fed talks. If the Fed lowers rate, you've got enough
right.
data to show it does not go down.
Yeah,
So,
that's right.
not everybody wants to, listen to the experts. We got so much media in our heads. It's just hard to come,
A lot of noise.
lot of noise and very few, talking the real stuff. So, all right.
Yeah.
Well, if anybody, be sure to ask them who sent you. I think the HELOC's amazing. Even if people don't borrow, can you get the HELOC and not draw? You might have said that earlier.
Yeah, you can get it. And well, the catch on that is if they give it all to you at once,
Okay.
but you can the next day you can pay it down.
Okay. So
Yeah.
let's say, especially people in town that, I mean, who knew 40 days? Who knew? I didn't think we'd be making a record, but some people thought it'd be till New Year's. I mean, this could be a difference in a lot of people's lives.
Yeah.
And just hold it for the next stupid time that it happens. I won't get political, but we just, history shows it's going to happen again.
It'll happen again. Yeah.
All right. Well, I hope it's helpful to some people because I know it's an amazing product.
Yeah. No, it really is. It's been a godsend for some, and then just a way for people to use equity and not savings. So
Yeah.
it's
Oh,
good.
exactly. Exactly. All right, Chad, I appreciate it.
Thank you.
See you later.
Bye.